Micro, small, and medium enterprises are the backbone of the Indonesian economy. Yet for most owners, the primary obstacle to growth is a constant daily struggle to find business capital. This struggle exists alongside a different reality. The government and financial authorities inject trillions of rupiah into this sector every year. The funds are available, but many MSMEs suffer from financial blindness. They operate in a way that makes them invisible or ineligible to the institutions holding the money. This starts with the illusion of shadow capital. When an owner fails to separate personal household consumption from business revenue, the business appears to have cash that has actually already been spent on groceries or rent. Owners also frequently suffocate their own cash flow by using short-term debt to buy long-term assets. Using a 6-month loan to buy a machine that takes 3 years to pay for itself creates a mathematical trap. To secure capital effectively, you must match your request to the specific step of the funding ladder your business is currently standing on. For new or micro businesses, the safest path is to avoid external debt entirely. At this stage, you should rely on internal equity, such as personal savings or profit that you reinvest into the company. Your priority is establishing a clear separation between your household budget and the business cash register. Every rupiah of revenue must be tracked as a business asset, not personal spending money. You also need to establish a legal identity. Securing an NIB, or business identification number, is the first requirement for moving out of the informal economy. These steps allow you to build a track record. When a bank eventually reviews your application, your NIB and your clean financial records serve as the primary evidence of your professional capacity. Consistent financial habits and basic legal registration are the only reliable fuels for this first stage of the business lifecycle. Once your business has stable daily or weekly revenue, you can begin to use credit to accelerate your growth. The primary tool for this is Kredit Usaha Rakyat, or KUR, a government-subsidized loan program designed to bridge the gap for MSMEs. The program is split into tiers. KUR Mikro offers loans up to 25 million rupiah at 6 to 7% interest. This tier is for restocking, processed without requiring additional collateral. For larger investments, KUR Kecil allows borrowing up to 500 million rupiah for expanded facilities. If you aren't yet ready for a major bank, local cooperatives and microfinance institutions provide a more community-based stepping stone with simpler requirements. Formal banking and KUR can move your business to the next level, but only if you have already proven that your daily operations are stable. Digital fintech lending offers a different kind of speed. This is a tactical tool for fast-turning needs, like buying stock for a sudden large order that must be filled in days. However, fintech carries higher costs and shorter deadlines. Using it to cover old debts or for equipment that takes months to generate profit is a high-risk move. If you want to expand without adding to your monthly debt, securities crowdfunding, or SCF, is an emerging alternative. SCF acts as a mini capital market where the public pools money to buy a small piece of your business, sharing in your future success. Modern funding offers unprecedented speed, but it requires a precise strategy to ensure the cost of the money doesn't outpace the profit it creates. Adding debt to a business that lacks clear records or legal standing usually accelerates failure rather than growth. Today, proving your business's health is becoming easier through the data you generate every day. As millions of MSMEs adopt QRIS, they are creating a verifiable digital footprint. Every scan provides a bank with a recorded history of your sales and cash flow. This digital trail replaces the need for complex accounting for many small lenders, providing objective proof of your ability to repay a loan. MSME Permodalan is the natural result of a well-structured business. When your legalities are clear and your transactions are recorded, you stop searching for capital and start becoming a business that capital wants to fund.